Welcome, welcome, welcome. Thank you so much for joining us today. I've got three awesome speakers lined up. Everybody's here. Angela from the Kensington Market Community Land Trust. I've got Mike from the Ottawa Community Land Trust, and I've got Nick from Indwell coming to us from Hamilton. So, I'm just so happy when I saw all of you sort of each launched your community bond, in the last sort of couple months or so. I was just so excited that I wanted to be able to share your stories with all of these fine folks. And so really grateful for you being here today. And thank you everyone who's taking time out of their day. Really the goal for today is to be able to shine a spotlight on these three organizations. I'm going to do a quick little primer about community bonds at the start. I'm not going to do any slides, anything like that, but just really want people to understand sort of what a community bond is at the most basic level. And then from there, really want to spend some time with each one by one, with Angela, with Mike, with Nick, to be able to hear about their organizations, the awesome work that they're doing, the community bonds that they have available. And then at the end, we will talk through sort of the basics of buying a bond and what you should expect and how that process works, just in case you do have any questions. Like I said, feel free to use the chat. I'm going to be keeping an eye on that as we go. But for now, let me just do a quick little introduction in case. I imagine like in the chat, can anyone say like who already owns a community bond? Can I get a feel for like, who knows what's up with this and kind of, already knows community bonds. But I do assume there are some people in here where community bonds are a very new concept. So let me outline it for you. Awesome. I see a couple raised hands. I'm seeing own through. Yeah, Nick, I know you've drank the Kool-Aid on community bonds, which is great. So the way it works is that a community bond at its heart is simply a bond. And the way a bond works is very simple. When you buy a bond, you are loaning money. And it's usually to a government or to a company, that sort of most of the bond markets would be governments and corporations. And we are loaning them money by buying a bond. And so let's say I buy a bond for $1,000. There are going to be a few different details about that bond that are important to understand. The first thing to understand is what we call the duration of the bond. Oh, I've got someone here. Hey, Zach, you're joining as well. Okay, great. Awesome. Hey, Zach, I might just get you to mute. Welcome, Zach, from the Ottawa Community Land Trust as well. Thrilled to have you here. That's great. So that basically what a bond is we are loaning money usually to a government or corporation. It's usually for a set period of time. So that might be for 3 years or for 5 years or for 7 years. There's going to be an annual interest rate that we're going to get for loaning money to that government or corporation. So we might earn, 2% or 3% or 4% per year. And then at the end of the term, we then can either choose to get our money back or we can choose to reinvest that money. So that's the basics of how a bond works. That let's say I buy, I invest $1,000 in a Government of Canada 3-year bond that pays me 3% per year. I'm investing $1,000. I'm going to earn 3% every year. I'm going to get that, I guess that would be $30 in my pocket for the interest. And then at the end of 3 years, I'm going to get my $1,000 back. And it's up to me to decide whether or not I want to reinvest that money. Well, a community bond is exactly the same thing, except instead of loaning money to a government or corporation, we're loaning money to a nonprofit. So, there are all of these challenges in our society that we're facing. There are some amazing nonprofits doing amazing work, right? And I want those nonprofits and their programs to grow. The question is always, well, how do we pay for it? This is where community bonds come in, because what we're doing with the community bond is we're now loaning money to a nonprofit so that they can do that awesome work. We're loaning for a set period of time. We're going to earn a set interest rate that's going to get, into our bank account every single year. And then at the end of the term, we can decide whether or not we want to reinvest that money. So that's a community bond. That's kind of the simplest way I can break it down. Hopefully that makes sense for everyone, that it's clear sort of what we're chatting about. If you've got a question about how that works from a practical perspective, throw it in the chat. But otherwise, what I would love to do is just kind of get started in terms of profiling these amazing organizations. So we're going to go one at a time. So Nick and Mike, I'll get you to turn your videos off if you're comfortable with that. That way we can really sort of shine a light on Angela and the awesome work that she does at the Kensington Market Community Land Trust. I'm now just going to look at my tech. And Angela, do you mind saying something so that you pop up on my screen there?
Yes, hello, hello.
Perfect. Awesome. Okay, look at this. I'm trying to up my game in terms of my design skills. So by all means in the chat, let me know if there's any issue, if for whatever reason you don't see me, you don't see Angela, or as long as everything looks good. But otherwise, let me know in the chat. But Angela, thank you so much for joining me today. I'm really grateful.
Yeah, thank you for organizing the event.
So I'm a huge fan of Kensington Market. This is like one of my favorite neighborhoods in Toronto. I've been going there for pedestrian Sundays for decades, really. Like I feel like it's been sort of 10 years plus that I've been going to the market, and I absolutely love it. But I know it's facing some big challenges right now. Talk to me a little bit about what's going on in Kensington Market as it relates to this affordable housing crisis that we're all in.
Maybe I'll start first by just sharing that the Kensington Market Community Land Trust comes out of a long history of anti-gentrification and anti-displacement organizing in Kensington Market. And so over the last 10 years, the community has really just been a battleground for a lot of different fights, rent evictions, big development projects like Loblaws and Walmart.
Yeah.
And from those fights came a pretty clear recognition that the community also needed to build a solution to protect the market and to ensure that we can help shape how we want the neighborhood to look and feel like in the future. And so the Kensington Market Community Land Trust was incorporated to buy and use land for long-term community benefit, specifically focusing on protecting the affordability of Kensington Market. And that piece is really key because that affordability has always allowed diversity in the neighborhood to thrive. So, when you walk through the streets, you see so many unique cultures and people and businesses that create such a unique sense of place. But that sense of place and that character is under threat in recent years because of all the challenges that the neighborhood is experiencing. So, things like development pressures or rent evictions and just the financialization of real estate, that's really just putting a lot of pressure on the neighborhood. And as an organization, we've seen a lot of changes happening. So for residents, long-term residents have not been able to keep up, and rents are increasing and they're being pushed out from the community, and that's having an impact on the fabric of the neighborhood and the relationships that are so integral to the place. We're also seeing a lot of long-time businesses, a lot of raw food shops close down. And that's really affecting how people are able to meet their daily needs from within the community. And then on top of that, we're also just seeing Kensington Market become more of a place of consumption and tourism. And so, we're seeing that in the rise of illegal short-term rentals that are popping up in the neighborhood and taking away the affordable housing supply. And then also, with businesses that are now catering to higher income groups in a way that doesn't really respond to the working class context and the needs of the community. And so as an organization, we're in place to fight back in the gentrification and hopefully, protect more properties so that we can ensure that the affordability and the unique character of the market will be there for generations to come.
Absolutely. And I mean, I live in Toronto. I've been here for a while. There's an area of town, which is Yorkville, sort of just north of Bloor Street. And that, now it's very sort of hoity-toity, like it's kind of bougie, like it's very high market and super expensive. There are a lot of fancy cars that go there. And I was shocked when I learned that used to be like a hippie hangout. That used to be where the Beatniks and Joni Mitchell would hang out. Like it's got this history, but it just, the gentrification is so real, right? That it's my fear is that, my biggest nightmare is that Kensington Market becomes like Yorkville. That the market, it just is so weird and so awesome and full of creative people and characters. And so preserving that, thank you so much for the work that you're doing. I know you're sort of standing on the shoulders of giants, of community organizers who have been part of this community and part of that fabric for so long. So let's talk, very bluntly about the financials here, that you're essentially looking to raise a total of $2 million. Is that right?
Yeah, that's correct.
And so my understanding is that the first part of it, that there has been a little sort of vendor take back, that, you know, that there was a push to raise that first sort of 200K, 300K, because you already own an existing property in Kensington Market that you are keeping affordable. And that the rest of the money, you know, what we're hoping for is to, for the first time, to really tap into community pockets, community investment, to be able to then purchase another affordable housing. Basically, like it's an entire building. It's not a unit. It's, generally speaking, you know, the building you currently own is a mix of commercial and rental. Is that right?
Yeah, that's correct. We were able to buy the building 3 years ago, after a long year of neighborhood organizing to resist the rent eviction of those residents. And now we've been operating the building for 3 years, at a small surplus each year. And we're really happy to have been able to keep the rents affordable, 80% average market rent, and then also to provide stable commercial leases to our commercial tenants.
Amazing. So I love the work that you're doing. I just think it's so gosh darn cool. What I want to do is just share my screen for a moment. Let me see. You know, fingers crossed. This look. Oh, there we go. I think that looks good. Hopefully everybody can see the Kensington Market Community Land Trust page. Oh, did we? Hold on. It just got a little cut off there. There we go. Okay, perfect. So we can look at it together. So yeah, so we are raising up to $2 million to acquire a second property. For those who are curious, it's this, the Mona Lisa mural building. This is the one you currently own, right? That's so cool. I love it. And so really what we can do, you know, we can see here, stop rent evictions, is that look at the specific details of this bond. So this is what I'm seeing here, is that you've basically got 3 different options. That we've got the Series A bond, that this is the most accessible, $500 minimum. It pays 2.5% interest every single year, and you're locked in for 3 years. Do I have that right?
Yeah, that's right.
Amazing. And then for those who do have a little bit more money to invest, we can talk about the Series B bond, which is $5,000 minimum, 5-year term, but it does pay a higher interest rate of 3.5%. And then for those, if there are any ballers in the chat right now in the audience, that if you are able to do a $25,000 investment, that is the longest term, 7 years, and 4.5% interest. Is that right? Mm-hmm. Talk to me a little bit about like $500 minimum. This is like one of the lowest minimums I've seen. Typically I've seen it's about $1,000. You went even lower than that at $500. Why is it so important to you that that we've got this such a low minimum to keep this bond accessible?
Yeah, we know that that we want to appeal to all types of investors, particularly our community members and our closest supporters. And so we know that, you know, not everyone may be able to invest in large sums of money, but are still really keen to support our work in Kensington Market. And so that's why we have that more accessible option. And we've been seeing a lot of people actually buying that bond in particular, which has been really exciting. And for us as an organization where our values are really rooted in mutual aid, we want to be able to keep that wealth locally in our community. And so if there is revenue to be generated from our work, we want our community members to be able to participate in that and to be able to benefit from the work we do collectively, which is why we have that lower bond threshold.
I love it. And this idea of mutual aid, I don't know if people in the chat are familiar with this, but mutual aid is something near and dear to my heart. But it really is just like, I would define it as people helping people. And instead of like charitable donations where there's a receipt attached and layers of bureaucracy, my understanding of mutual aid is really, it is like direct giving to people who are in need. And that to me, I love this idea because it does, you know, it's a bit of a new spin on philanthropy, which I think community bonds are like part of this new spin on philanthropy. That certainly when it comes to these bonds, like 2.5% interest, like there's somewhere else where I could earn a higher return than that. Right. So I am sort of like conceding or giving it, you know, earning a lower interest rate than I would have been able to otherwise. But obviously the impact that we're having by doing this is so high that I'm going to be able, the next time I walk through the market and, you know, see the Mona Lisa, you know, mural, and I'm going to say, hey, like, you know, my community bond, that's owned by the Community Land Trust, that I'm a part of that. There's certainly like this really warm, you know, I called it sort of warm fuzzy formalities, but this positive impact and this good feeling about doing this, but in a way that's different from just a donation, that not everyone is in a position where they're able to donate money or to just, sort of be a philanthropist. So to me, this is a really cool kind of like in between, that it's not a market rate of return, but it's also not, a full charitable donation. It really is a way for people to be able to help the cause and contribute to keeping Kensington Market more affordable, but while also earning, we're not going to get rich off of 2.5%, but we're still at least earning a return on our investment. Does that feel right to you?
Yeah, it is. And, people are playing a really important role in helping us preserve affordable housing and the small businesses that are in the market. And so I think that the impact of that is not to be underestimated.
Absolutely. I love it. And super cool. I'm just going to go through real quick kind of how it works. If people want to right now, why don't I see if I can throw this link in the chat? I always just absolutely love it when people, if you do want to follow along with us, if you feel inspired and you're like, Tim, I want to buy a bond, this is kind of how it works. Here's how you can get started. Basically, what you do is you start by providing a little bit of information. We're going to do your name, your email, your phone number, how much you're looking to invest. I find it really interesting that it's a minimum of $500, but you can invest in increments of $100 from that. So if I wanted to do 600 or 700, that could be really cool. From there, which Kensington Market series would you like to invest in? So series A, B, or C with the different amounts and interest rates and terms. How did you hear about it? Hey, you can, let's do an event, see if there's a way to be able to drop us. I would encourage people to sign up for the e-newsletter. Once you've submitted, Laurel, I see you've already done this. Awesome. If anyone else is doing this in real time, throw it in the chat. I love hearing that people are taking that action right now. Basically, what's going to happen is that after this, we are going to, you're going to get an email with the investor package. So I would expect you to receive an email with a little bit more information. Don't get overwhelmed by that information. There is going to be some legal language in there and stuff they need to send you. Feel free to review it. If you have a lot of questions, know that I'm here for you. I'm sort of your friendly neighborhood financial planner. If you're worried about that stuff, then by all means know that we can always chat it through. But the goal is for you to review that investor package, give it some thought. If you decide you're ready to invest, you are going to have to provide your SIN number, right? Because this is taxable. We are going to be paying taxes on this. The CRA needs to know about this. You're also going to have to provide photo ID because, again, the government needs to know. We're not doing any money laundering here. They need to know who you are. And then the final thing is that you are going to provide your bank direct deposit information. You can either do a void check or one of those direct deposit forms. Basically, you're going to authorize them to withdraw the initial amount from your bank account. And then that's also going to be the same information that they're going to use to do a direct deposit into your bank account. I believe it's every year. Is that right, Angela? It's once a year that interest gets paid?
Yeah, every year.
Amazing. And so every year you're going to get a direct deposit straight into that same bank account. And then you are going to get a T5 slip. So you are going to get a little tax slip, in probably sometime in February. And then from there, at the end of your term, usually it's a couple months before the 3 years, 5 years, or 7 years are up, you're going to get an email saying, hey, about that community bond, do you want to reinvest it or do you want to withdraw it and get that principal repaid? So that's how it works. Really want to encourage everyone to, at least sign up and get more information, get that investor package, and that really, want to encourage people to be able to, if it makes sense for you, would love to hear that people are buying bonds. Okay, awesome. Angela, before I let you go, I kind of want to end on sort of a bit of a big picture note, just in the sense that, I want to hear from you like this. I think this is more than just a $2 million raise, right? That there's, I think, more at stake here, because I think this has the potential to be much bigger than buying like one more building in Kensington Market. So for a moment, I want you to dream big. And I want you to just imagine, like, after this successful $2 million raise, what is that potential impact for community bonds as it relates to growing and scaling the community land trust?
Mm-hmm. I think what's neat is that, the KMCLT as well as the Ottawa CLT were the first land trust to launch community bonds in Canada. And so I think the potential for us to use community bonds as a way to tap into more sustainable sources of funding through our community to support our work is really where it's exciting. We know that there are a lot more land trusts that are popping up, and that's really great. But the reality also is that, we're going to be chasing similar pots of money. And so, while we need the government to also invest in affordable housing, if we can use community bonds as a way to be more self-reliant in how we finance our work, that will really allow us to scale up our impact and to do it on our own terms. And so hopefully that will also be the case for other land trusts.
I love it. And I think I love the community land trust model. Angela, I love the work that you're doing. Thank you so much for joining me today. I really appreciate it.
Bye.
Awesome. Okay, Mike, I'm going to invite you to unmute and come on board. Awesome. So Community Land Trust, we just heard from Kensington Market. Now we've got the Mike from the Ottawa Community Land Trust. Thank you so much for joining me today.
Thank you. Good afternoon, everyone.
Yeah, awesome. So, Ottawa is a city that is near and dear to my heart. I go there quite often. It's our nation's capital, but it also hasn't escaped the housing crisis that I think, so many cities are in. Talk to me a little bit about what's going on in Ottawa and, what is that work that you're doing with the Community Land Trust?
Absolutely. So, I'm sure that the housing challenges that we're facing here in Ottawa are ones that, all of you who are on the line are familiar with. They're the ones that are making headlines. They're the ones that we hear about increasingly in conversations with our own families and friends. So we're facing a significant loss of affordable housing. There's no doubt that, governments are investing in some development of new affordable and supportive housing. I think I would certainly say that more of that is needed. But the reality too is that all of that new housing that's being built is not nearly enough to even keep up with the amount of affordable housing that's being lost. And so what I'm referring to there is, private owned stock that is what we often refer to as naturally occurring affordable housing. So, units where perhaps tenants have been for, 10, 15, 20 years, who have benefited appropriately from things like rent control, and are paying rents that are affordable. And the challenge is more and more of those units are being lost to things like rent evictions, something that Angela talked to, but also, when a building sells, a new owner wants to redevelop that, or simply when a tenant leaves, there's, of course, no rent control in that particular unit. And in recent years, we've seen rental increases of 18, 20% in those units. So I think it's in the face of that significant loss of affordable housing that our land trust was set up a couple of years ago to try to intervene on that particular challenge.
Amazing. And I mean, I love this idea that Angela brought up about self-reliance. I just think it's so critical. I mean, you are in our nation's capital, so we can say that, hey, okay, I think that the federal government understands that we're in an affordable housing crisis now. They maybe a little late, but they have heard that message. But there is going to be an election in a little while, and we don't know what's going to happen there, and we can't count on increased support for public housing and for nonprofit housing. So I really think starting to develop some of these models to encourage self-reliance, I think that is such a critical part of that. And that, talk to me about, this community bond that you're raising. I think it's 1.7 million. Do I have that right?
That's right.
Amazing. So we're raising $1.7 million. How are you going to use that money?
Yeah. So, I think, given that sort of problematique that I began with, where we're losing, all of this affordable housing, we were really created to kind of have a really laser focus on raising capital to try to acquire and preserve some of these affordable units. So what can we do to transfer them from, the speculative real estate market into the hands of community? We are an incorporated nonprofit. And so, we're experimenting in terms of how do we blend capital from different sources in order to do that. I think we all know the challenges of preservation of affordable real estate. And we're looking at the community bond as one kind of community finance tool to help us fill in, what we might refer to as the capital stack of any purchase. So, we were really encouraged by the federal government's new rental protection fund that they recently announced, and would wish to see our city and province get on board with that kind of grant capital. But at the end of the day, we know that we can finance properties with multiple sources as well, and are looking to the bonds to assist with that. So we kind of identify two particular, ways in which we want to use this raise. We acquired our first property last fall in a really exciting partnership with Van City Community Investment Bank. We need to pay off the line of credit to purchase that. But with all of the momentum that we've seen, we thought we would try to raise enough to acquire at least 2 more properties. And so we're looking to acquire 2 more multi-unit properties this year. Where there's no shortage of opportunities in the sense of of properties that would be available for purchase, if you will. So we're looking to use the bond as kind of a second mortgage or patient capital. But then we also know that being able to assemble a down payment according to the timelines of real estate can be really challenging. And so we're trying to grow ultimately a revolving fund and are looking at this community bond raise as one of the first kind of capitalizations of that fund. So what we've done is kind of sketched out a couple of potential properties, hypothetical properties based on our organization's acquisition policy. So we have all the financial parameters in there. And when we find those properties, we want to use the bond proceeds towards purchasing those.
Amazing. And so you brought up a term that I love explaining to people, which is this idea of a capital stack. I think this is kind of like one of my favorite financial terms when it comes to this language. And I think it's so critical to understand because, $1.7 million, when you think in the context of buying multi-unit properties or, oftentimes these are, larger buildings, doesn't get you very far these days. And so I think it's important for people to understand that this is just part of your sort of capital stack, that you can raise money for a community bond, but you're also going to be getting, government support. You're also probably going to be getting a mortgage from, a bank or hopefully a local credit union, right? That's a little more values aligned. And to be able to, to really kind of, this is part of that capital stack. But often it is, I think, a really critical part of it, because it's really, this is the community side of it. So this is really, if I think of the capital stack as like a tree, this is really like the base of that tree and those roots, because I think that these relationships and that self-reliance, that it's going to go further than the relationship with government. It's going to go further than the relationship with, a bank or a credit union, which might be a bit more transactional. Those groups aren't necessarily going to appreciate the community impact as much as community members who live there and are really fighting for this. I see Laurel in the chat asks, can Mike please say the name of the CMHC funding again? So that's the Canadian Mortgage Housing Corporation funding that you referenced.
Yeah, and sorry, Laurel, I'm not sure that I referenced CMHC. I mean, our first purchase we did in partnership with the Van City Community Investment Bank, so part of the Van City group.
Yeah.
And when we pay off the line of credit on our first purchase, we will of course pursue a mortgage and likely benefit from hopefully the MLI Select program from CMHC.
Yeah.
But at this point, CMHC has helped provide grant capital to us as an organization for operational funding.
For operations.
But down the road, yeah, we certainly look to benefit from some of their low interest financing and so on.
And I will speak to Laurel. I know there have been announcements, sort of government announcements, or more funding for these and additional programs. I don't know any specific names of the programs, but I also know it takes a while for the cash to actually start rolling out from those announcements. It doesn't start right away. So again, this is why I think it can always be a little bit precarious, especially with an election, federal election, sort of not too far away. So it can be a little bit tricky. And she's just asking for operational funding. It looks like that was there was a grant there. And that I will just say, Laurel, would just really encourage you to get in touch with Mike. Especially it sounds like you are starting an organization, Georgian Bay. Amazing. I do want to keep this focused a little bit on the community bond here, but love what you're doing, and really happy to facilitate an introduction there, because there's a lot of cool stuff going on in this, and that certainly when you are ready to launch a community bond, please let me know, because I would love to share it with my network. I do have a question from Kristen. How are community bonds secured? Are they covered by CDIC? So I can handle the second part of that, and then maybe Mike, we'll get you to talk about the first part of that, which is, in terms specifically for yours, that really, Kristen, what it comes down to is no, these are not going to be insured by something like the CDIC. CDIC, for those who don't know, is the Canadian Deposit Insurance Corporation. So this is the only thing in Canada that I can say is like guaranteed are deposits or GICs, guaranteed investment certificates. That G is for guaranteed, because they are guaranteed because they are insured by the CDIC. So if you keep your deposits at a bank or a credit union, or if you've got a GIC at a bank or a credit union, that's like 100% safe, because even if they go bankrupt, your money is insured by the government. Bonds in general, no bond on the market is insured by the CDIC. That's just not how they work. And in this case, really when it comes to community bonds, each one is going to have its own unique risk profile. In my language, I talk about this idea of default risk, which is like the worst case scenario, that the organization goes bankrupt, and then, sort of what happens there. Mike, can you talk a little bit in the case of the Ottawa Community Land Trust Community Bond? What is that sort of, securitization, and what happens in the worst case scenario?
Yeah, so our bonds will be secured against the properties that are part of our portfolio. So right now we are very near to paying off the line of credit on our first property, and as soon as we do that and register the mortgage, the bonds will be registered in that way. And in the same, when we purchase our second and third property. So we invite further conversation on that. I think in our offering statement we make it clear that there is a very short period of time where upon purchase the bonds are not secured, because we need to raise the capital in order to close on our purchases. But as soon as we do that, they will be registered against those properties.
I love it. And Angela, thank you for chiming in the chat, saying that Kensington Market Community Land Trust community bonds are secured against their current buildings. So again, trying to leverage that. Ryan says we were planning to do a community bond campaign later this year. I'm so excited. That sounds awesome. Let me go back to the screen share for a moment and see if I can bring this back up. Before we look at the Ottawa information there, I do just want to say, because Ryan and people are talking about other sort of community bonds, that I do keep a list of community bonds, and I'm a little bit behind. I actually need to update it, because there were 2 that launched recently that I need to add to this list. But this is kind of my list of available retail impact investments in Canada. And so the way it works with a lot of these community bonds is that sort of the window opens and they're available, but then they sell out and the window closes and those bonds are no longer available. So I kind of keep this list here. We should be able to see, here's the Kensington Market Community Land Trust. Where's Ottawa? I had you in here. I know there's the OREC, but I'm going to have to go back through my list and make sure that you're on here, Mike. I got to be able to do that. Indwell, I do have here as well. So I'll make sure I know this is in need of a little bit of an update, since you guys did just launch it recently. But, this is my way of saying there are lots of community bonds available. I do try to keep a list on my website as best as I can. And so Ryan, would love to be able to add yours to the list as soon as it does launch. But for now, let's stay focused on the Ottawa Community Land Trust. We can just kind of go through the different series that you've got. I believe it's down here. Oh, I see you're 29% of the way there. Amazing. This is so good.
We just had another update this morning. I think we're getting close to, we raised about 675.
675 now. Oh my goodness. I'm so happy. This is so good. You're cruising along. You do offer different series. So again, this is really common to have different series here. I can see here for 3 years at 3.5%, $1,000 minimum. Now this is curious, interest paid at maturity. So investors wouldn't get a direct deposit every single year. Instead, they'd get sort of the lump sum, 3.5% times 3 years. They would get that back at the end of the 3-year term, in addition to the initial investment. Series B is locked in for 5 years, pays 4% per year, $5K minimum, but this one does pay annually, as well as Series C, 7 years, 4.5%, $50K minimum, interest paid annually. And then this is kind of cool. You've got this bond Series D, which, I've seen these before, where this is really for people who are saying, you know what, I don't need the interest payment. You can keep the interest, right? Really, I'm just happy to loan you money at 0%. Is that right?
Absolutely. Yeah. I think we've heard from folks who are like, I just want to know that my investments are helping the community, and by pooling them with others can have this community impact. And so, we often talk about the rate of financial return on bonds is a little bit lower than you might be able to get elsewhere in the market, but
Yeah,
it's matched with this community impact.
it's
And these
cool.
are from, some folks who have said the community impact, quite frankly, is enough for me. And
Yeah.
so, yeah, it's a bit of an experiment. We haven't calculated any of that 0% bond category in our modeling.
Okay.
So anything that we get is a bonus. But we've had a couple of small investments come through in this way.
I love it. I think it's so cool. And again, it speaks to this, like, somewhere on the spectrum between a market rate of return, standard investment and philanthropy, right? In this case, because you're loaning at 0%, I consider this like recyclable philanthropy, right? Instead of, donating money, $500 every single year, and then next year the nonprofit needs that $500 for their budget. We're loaning them the money, zero interest over 3 years. At the end of 3 years back, I can recycle that and loan that same $500 back to the organization. That to me, it really is a cool way of doing that. This is awesome. This is fantastic. I absolutely love what you're doing. If there are questions specifically, throw them in the chat. But otherwise, I would just, before I let you go, I want to ask you kind of that same big picture question that I asked Angela, which is like, talk to me for a minute about what community bonds could be. That, you're successful in raising this 1.7. This is the first time you've done it. I think Angela mentioned you two are the first two community land trusts to really kind of try on this community bond model. What do you see for the potential if and when you are successful with this raise?
Yeah, I mean, we certainly anticipate this to be the first of multiple raises. I mean, we would love to go back. I think that, the community bond as it's structured is a really accessible tool. It's quite accessible, in some of the investment thresholds. I think there are a lot of folks who can reach those. I know that's not universal, but there are a lot of folks who can pool their resources in this way, but also just the tool that it's not hard to navigate. I think the housing challenge is so big that many of us are asking questions like, how can I make a difference in this, right? And I think this is a concrete way of working together. And then I guess I would end with, this aspiration to become like an investee of choice. We've had a couple of community organizations actually in the city who, serve their neighborhoods in health and community services. And as organizations, they have reserves. And a couple of them have opted to invest a component of their reserves in our bonds. And so it's another way of existing community wealth supporting community well-being. And I think if we can grow that, I think that's a really exciting future. So I think there's a lot of opportunities.
I love it. I'm so excited. For me, it's kind of funny in the nonprofit world. I often joke that for a lot of nonprofits, debt is a 4-letter word, right? That like boards, like they don't want to think about debt. They don't want to, like, no, it's scary to have debt. But to me, especially, in this situation with affordable housing where it's so capital intensive, like nonprofits need big gobs of cash in order to do the good work of keeping things affordable and to do that. To me, I love this financial model. I'm so excited for what you're doing in Ottawa, and fingers crossed people keep doing that. Let me show the share screen. I do see a question from Kieran. If I buy a bond, do I receive annual reports?
Yes, there will be annual reports.
Amazing. The last thing I want to do is just show people here, what to do. So I posted the link in there. What we want to do is just go down. We've got this big green invest button. It looks like you've got the, the package there that people can download it, right off the website. But again, you just provide your name, email address, phone number, sign up for the newsletter. Why not? Keep up to date on these things. Which bond you're looking to invest in. Again, it's kind of nice. Whatever the minimum is, it does look like we can do in increments of $100 above that, which to me is a really nice feature. And then you can go ahead and submit this to be able to get on Mike's list. And, from there, they're going to follow up with you with more information. Again, if you do want to invest in a community bond, you're going to need to provide your SIN number, photo ID, a bank, either a void check or direct deposit form, so that they can pull the money out, whatever you authorize them to do. And then also so that they can pay you your interest, and then at the end of the term send that money back to you if you decide not to reinvest. Awesome. Mike, thank you so much for joining me. I really love the work. I'm excited. I'm going to be in Ottawa next week. So pretty pumped to be able to see you sort of live and in person. And yeah, pretty pumped.
Thanks for the opportunity. Thanks for this. That was great.
Awesome. Great. So Mike, I'll get you to turn your camera off, and then Nick, if you don't mind joining. And I just see some great questions in the chat. One of them specifically is for you, Nick, so we'll get to that one in a moment. Okay, Emma, question I don't quite know how to ask, but hopefully makes sense. Can these bonds be purchased from within a registered account? Oh, and Mike, can I just get you to turn your camera off? Or Nick, why don't you just say a few words?
Yes, I'm here.
Perfect. Okay, sorry about that, Mike. I'll get you to turn it back off. There we go. Now I've got Nick there. Okay, so we're actually going to address this question in a moment, Emma, because Indwell is a little bit unique in that one of their series, they made it RSP or TFSA eligible. So why don't we kind of address that question when we get to that point? Okay, awesome. Nick, thank you for being in the chat, and Angela as well. I love it. Melanie does ask, has anyone ever asked investors to donate back their investment each year? So, we can talk a little bit about kind of some of that donation. I think it's really, really interesting to the different types. But for now, why don't I just, if you don't mind, I'm going to introduce Nick and kind of talk a little bit about the situation in Hamilton. From there, we can get into the nitty gritty about Indwell's community bond. We'll talk about RSPs, and then, absolutely we can talk about donating that money, whether it's partway through the term or, certainly at the end of the term, you can always make the donation then. But Nick, thank you so much for joining me. I really appreciate you being here.
Yes, happy Wednesday. Thanks for having me.
Awesome. So, your Indwell is based out of Hamilton as the headquarters and where this project is located. But I know Indwell quite well because you've done projects all across southwestern Ontario. That my hometown is London, Ontario. So, I've got sort of a special connection there. And you've done some really cool work there. But you're at a bit of a different place than the Community Land Trust in terms of the problems that you're solving. That really my understanding for Indwell is that your goal is really about building supportive housing. Can you explain to people, what is supportive housing? How does that work?
Yeah, absolutely. I'm super excited to share the narrative of Indwell. Before I do that, I'd like to take one step back. 50 years ago, in 1974, a group of Christians opened their home to folks living rough as a result of deinstitutionalization of psychiatric hospitals. And that essentially was the birth of Indwell. And wow. So for a while after, they operated a transitional housing apartment where folks had 2 years to stabilize before they moved on to their permanent apartments. And then in the year 2000, the board of directors made a decision to basically pivot to the supportive housing model that we have now. And what that means is supportive housing means, on the one hand, you provide deeply affordable units at $600 to $700 a month. So whether you're in one of our buildings in Mississauga or in St. Thomas, essentially the rents are the same. And then on the other end, we provide a spectrum of supports to the tenants. So for some folks, that means basic life supports, karaoke night, let's plug you into the community, and support services. On the other end of the spectrum, it means daily administration of medication and daily meals. So that's essentially what we provide as an organization. We just celebrated our 50th year in operation, which is incredible to be part of that legacy. We have 1,300 units across 28 different programs in South and Southwestern Ontario. So we operate in 6 municipalities, basically from Mississauga to Hamilton to Woodstock to the Kitchener region, London and St. Thomas. So really exciting. We have a big impact now that we can provide and essentially create. And so coming back to Tim's question around how and why are we using community bonds, it's clear to us that there is a housing crisis, especially if we look at the number of folks living rough and living and being homeless. So in Hamilton specifically, that's about 1,500 people on any given night are sleeping rough. We want to create more housing into that housing ecosystem, and Indwell over the last few years has really developed a lot of its own buildings and has increased its portfolio. So one of the challenges that we're facing is what we call the first in capital problem, which is basically the dollars required to acquisition of property, to buy a property, and then to move it into and through pre-development, which is really your designs with your design team, and then moving a project along the municipal approvals, such as zoning, site planning, getting to your building permit.
Right.
Now, once we get the building permit, CMHC, the federal government, says, we love what you're doing, we'll extend you a commercial mortgage, but anything prior to that, once we don't have a building permit or the design's ready, they don't want to provide us financing up until that point. And so we have designed the Open Homes Hamilton Community Bond. We launched March 26th this year in order to mitigate that first in capital problem. And so far we've raised about $4.2 million.
Woo!
3.6 in the bank. We have 600,000 on its way in the digital system somewhere.
And you're doing 5 million total, is that right?
5 million is the goal. We've raised 4.2 so far.
Yes.
And so
yes,
majorly excited. Big kudos to our team for putting this together, and also our generous support community. People really leaning in, saying, I want to be part of the change here. I want to drive to a jiu-jitsu class or a yoga or to the grocery store and not see encampments. I don't want to see tents in my community, but I'm not quite sure how I can be part of that solution. I think community bonds are a part for folks to be part of that solution while they earn a financial return on their investment.
Amazing. That's so awesome. I love it. And I'm so happy for your success to see you at that number, that sort of thermometer. Keep going up. You're getting close to the goal. And I do want to remind people that the way these community bonds work is the window opens and then they sell out and then the bond, it closes. You know, so you do have to get in. I would say, you know, if you're thinking about buying an Indwell bond and you weren't sure and you're procrastinating a little bit, consider this your warning sign, your message that get in now. Otherwise, it will be too late, that they will be, you know, I think they will be selling out soon. Okay. Kieran asked a great question. Where does the financial return come from?
That's a really good question. When you're developing a construction project, if we would take out financing from a bank, and that would be at 5% or 10%, we would capitalize that interest to the job. So long story short, whatever we're borrowing and the cost of that, we're adding that to the capital stack of the project, and then our long-term commercial financing takes those dollars out and pays for the interest essentially. So there is no crossover to the operational side of our financial model, if that makes any sense.
And that, you know, I've kind of poured over the financials that, you know, my understanding is that Indwell does have sort of multiple different revenue sources, that you do earn sort of revenue from rent. People are still paying rent. It's below market rent, but there is still rent money coming in. There's grant money coming in. There's donations. Like there's a whole charitable arm attached to this. So, you know, really there are quite a few revenue sources there. Melanie, shout out to London, Ontario. Love it. Your work at Pillar Nonprofit. Big fan of Innovation Works and the community bond that you did there. Hopefully we'll be back in London soon. Question from Blair. Does Indwell secure the bonds against existing assets? I love how people are learning about, you know, securitization and understanding the situation.
Yeah, I love that question. Just a quick shout out to Melanie. I used to work for Pillar, so it's an organization near and dear to my heart. And in fact, I was a bit of a cheerleader, not a cheerleader, I was on the sidelines of the community bond raise, and so a lot of the things that I saw and learned back then, we get to apply now for our team. So kudos to Pillar. Blair, so we have 5 series in our community bond, series A to E. Series C is
I'm just going to share my screen here. Give me a second here. Give me one moment to catch up. I'm just going to come down so that people can look at this. So here's bond series A, B, C, D, and E. The one that you're talking about is bond series C, correct?
That's correct, yeah. So the Series C, we are, that is eligible to be, you can invest in that through an RRSP and or a TFSA. So it's a 4-year term, 3-year term, it's $10,000 minimum investment. And that series is going to be secured on title for one of our projects in Hamilton up to $2 million. So our goal would be to raise $2 million in Series C. That's the max aggregate that we can raise there. and then we would secure that on title of one of our properties that is has enough equity to support that.
Love it, Nick. And I just want to take a moment here just to explain kind of this concept that, yes, it absolutely is eligible, but there is a reason why it's kind of at this level, and that it is that, in my experience, I've helped a lot of clients who want to invest in community bonds through registered accounts, RSP and TFSA. And it is a bit of a pain in the butt that you have to open up the accounts with an organization called CWCF, the Canadian Workers Cooperative Federation. So there's some paperwork involved. You do pay a fee to open the account, and then you do pay a fee to keep that account open every year, meaning that, really it only makes sense if you're doing 10K or more. That the savings that you get by keeping it tax sheltered, are about break even. You might come out a little bit ahead at 10K. But I just want to be clear that for a lot of people, and I don't think the Community Land Trust, I don't think they have an option that is RSP or TFSA eligible. And that, for most of my clients, 95% of my clients, we don't do this through a registered account, that we just simply buy directly from the nonprofit. It does mean we're paying taxes on the interest that we're earning, but again, so many people are kind of doing it for the warm fuzzies, and this shouldn't be a huge percentage of your overall portfolio. And it's really only in specific cases where it's like, if you're like, Tim, like really the money I have for retirement is inside my RSP, that's really the only way this is going to happen, that, and you're willing to do it for 10K or more, that's when it starts to make sense to look at this as an option. But this is really cool. And so, so I think, part of the additional piece of it is that not only is this the series that is eligible for RSP or TFSA, but this is the series that is kind of explicitly backed by that asset. Is that right?
That is right. And then in addition, we have set up a trust, and we also have a trustee in place. So in the highly unlikely scenario that Indwell defaults on the bond, which means it doesn't pay out the interest or repays the principal.
Yeah.
We have a trustee that steps in and basically, on behalf of the investors, engages with Indwell to understand how those bond investments can be paid back.
Yeah.
So it's a security measure that you have to move forward on if you want to allow for investment through registered products.
Yeah.
And to us as a charity, we wanted to go one step beyond in trying to provide security measures to our investors to the best of our ability. So even if you look at our offering statement, our business case, our financial model, to me, well, I also partly wrote it, so I'm a little biased, but it carries a good level of weight, and to the point now where we've been able to secure investment from 2 institutional investors. One was for $500,000 and one was for $2.5 million.
Wow.
We did not know that was coming when we designed this.
Wow.
On the market, but so to me, it speaks to a level of, I don't know if seriousness or weight is the appropriate term that it carries. And we see a lot of that seriousness back with the other bonds as well. So I've bought a Kensington Market Community Land Trust bond. I'm on my way to buy one for the Ottawa Community Land Trust. They're doing really impactful work, and the due diligence behind it, and I've been doing this work for 10 years, this is really sound when I look at it. So I would 100% recommend that you look at all 3 options that were presented to you today.
Awesome. And you don't have to just choose one, very much, you can spread it around a little bit, do a little bit here, a little bit there. Diversification is our best friend. But this is awesome. But I do want to just pick up on something you said. I just want to be clear. So, because you said you're now like 4.2, but 2.5 million of that was from one institutional investor. Is that right? And I just love it, because that to me I know there are some people in the chat that might be with nonprofits or, groups thinking about doing a community bond. And, it's just to me such a cool thing that when we talk about making it accessible and doing a campaign like this, sometimes there's some pushback. Well, like, Tim, that's a lot of paperwork, to do $1,000 minimum investment. But in my experience with these community bonds, you kind of cast a wide net, and then all of a sudden you get, 1 in 10, 1 in 20 investors, and they usually hear about it from someone who like invested $1,000, right? And then talked about it and told people about it. And that's really how you can actually attract these larger investors, is by doing something that is accessible and available to, as wide an audience as possible.
Yeah, I fully agree with you. So we have 34 retail investors and 2 institutional investors making up the 4.2. We have
Amazing.
about, I would say, 60 people that are in the pipeline. So they filled out the inquiry form on our
Yeah.
website. If you scroll down to them, you can see where that's at. And so we're really excited to deepen the relationships that we have with some of these folks. And for some folks, they've never heard of Indwell, and this is the first time that they're interacting with our organization. So we're
Yeah.
quite curious about deepening their relationship in other ways, whether they could become donors or volunteers or in whatever capacity.
And building
That's
that
really
social
exciting.
capital. I think sometimes a lot of nonprofits, when they hear about this idea of doing a capital raise, they're like, oh no, we're going to be eroding all of our social capital. We're going to be asking people for money. I feel icky, or I feel like, I can only do that so many times. It's going to sort of, I'm using up my social capital to do a raise. But what I find is that it's the opposite, that when you do an offering like this and you put it out in the world and you ask people for their help and able to invest as little as $1,000, you increase your social capital so much. And I'm sure that this has been a great, awareness building campaign for Indwell in addition to being a capital raising campaign. Do you agree with that?
100%.
Amazing. So, I really encourage people, if you want to do it, your name, email address, phone number. This should look familiar by now. You can select from the drop down menu which series you're interested in. Again, what's going to happen is you fill this out. Nick's going to send you the investor package with lots of information. If you've got questions about that, I am here as your friendly neighborhood financial planner to help you translate and understand all of the financial information and how this can fit into your investment plan. From there, if you decide you want to go forward, I really would encourage you to take that final step. You're gonna need to provide your SIN number, photo ID, upload a void check or direct deposit form to allow them to withdraw the initial investment from your account. They're going to direct deposit and pay you your interest right into that account. And then at the end of the term, whether it's 3 years or I think 7 years is the longest one, that you're going to get an email saying, hey, do you want to reinvest or do you want that money back? Awesome. Nick, I do want to respect people's time. So I want to ask you very quickly for your sort of like big picture, like you've almost done a $5 million raise. I feel like that is, like you're very close to that. Am I right in thinking this is like the first step for you when it comes to community bonds?
We have been familiar with the community bond vehicle. We have a loan fund currently that's about $28 million that we started in 2007, and that's kind of just grown. We've never missed an interest payment or a repayment of principal since 2007, so we're very familiar and adequately positioned to take on dollars this way. The community bond was a new way for us to market this type of financing vehicle in a specific community, Hamilton. We are shocked and overwhelmed by the generosity of our support community. Now we're thinking, what if we do one in London? What if we did one in Mississauga? And then potentially, what would a bigger bond structure look like? Kind of in the realm of 15 to 30 million. These are aspirations. Please don't message the CEO that I just said this. These are aspirations that we're researching, that we're really excited about. And so it's been a wonderful journey. It's been wonderful journeying with our community through this bond vehicle.
I love it. Well, you're kicking butt. I'm so happy to see the success that you've got. I do want to remind people that it will sell out, maybe even soon. So, get in there while you can. And really, thank you so much, Nick. Really appreciate you joining the call today. Really, really appreciate it. Awesome. So that's going to be it for the webinar. Thank you, everyone, for participating. Really appreciate you being here and doing this, spending this time with me. I can't tell you how grateful I am just for you to spend an hour. This is going to be posted up on YouTube. So YouTube, I'll make sure that, any of the links that we've talked about are in the description below. If you've watched this far, make sure to like and subscribe and leave a comment. So grateful. Everyone in the chat, this is awesome. Seeing some great things. Happy to have organized it. Greg, great information. Thanks for hosting. hosting. Kristen, very informative. Thank you. You know, Emma, thanks for doing this. Tim, book meetings with you and Mike. I'm so thrilled. Absolutely, anyone can book a free consultation with me if you want to talk about your personal investments, whether it's about community bonds, whether there's a bigger thing going on in your financial life. Everyone gets a free consultation, so feel free to use that link and to set up a free consultation with me. Thank you so much for being here. I'm so grateful. Have a wonderful day, everyone, and enjoy your summer. All the best. Bye.